Welcome to Thackray's Sector Update, November 2013. We've just started the favorable 6-month period for the stock market, which runs from October 28th into the beginning of May. There's a lot of sectors that are just starting their seasonally strong trends right now. A lot of opportunity. This is the time period where investors should be favoring the sectors rather than the broad market. Well, let's take a look at 3 of those sectors today that are in their or starting their seasonally strong period. The first one is the Canadian banks. The Canadian banks tend to do well from October 10th to the end of the year and then from late January into April. Why do Canadian banks do well right now? It's because of their year end. The year end for Canadian banks is October 31st. And investors love to be in there for the news that comes out at their Q4 earnings announcements. Banks are more likely to give positive guidance at the year end. They're more likely to increase their dividends, and they're more likely to split their stock when it's appropriate. And there's a lot of rumor on the street right now about the possibility of stock splits. TD's getting up there close to $100, and banks don't like their stocks that high. So investors are looking and saying, we think they're going to split the stock, and Canadians love stock splits. They love to get in there before the stock actually splits. Overall research around the globe basically says that stock splits do not have a dramatic impact or do not have an impact on the price on a go-forward basis. But Canadians love to be in there to take advantage of that stock split so they can double their shares. If you take a look at the Canadian banks, we're going to use the equally weighted ETF, ZEB. And from October 10th into December 31st, if you take a look right here, that's this period right here. It was positive. Back in 2011. In 2012, same thing here. This was once again a positive seasonal trend. And right now this is October 10th. Look at this, it's going parabolic. And actually banks started to do well back in late July because of their earnings. And in August they come out. The earnings announcements helped drive the bank sector up, outperforming the S&P 500 and the TSX. They've done extremely well. This is a little bit of a parabolic move taking place. I don't know when it's going to stop. You can't tell with this type of move. And yes, it is overbought. Put the RSI down here. Look, this is overbought. The most overbought it's been in quite a few years. But it can still keep going higher. It does mean that you need to have a little bit of caution. Normally, you want to be holding the Canadian bank stocks as a sector until the end of the year, until December 31st. But given that this year they're coming out with earnings in the first week in December, watch for the bank stocks to pull off perhaps at that time. Investors are going into the sector right now anticipating positive news. But as seasonal investors, what we want to do typically is get in before the average investor does. And when the big event occurs, in this case their earnings announcements, we'll tend to start exiting the position. So first week in December, watch out for the bank stocks, or even just a little bit before that, watch out for the bank stocks to actually start pulling back a bit. And if it starts to technically break down, that might be a good exit point or start reducing your positions. Okay, let's take a look at the industrial sector. One of my favorite sectors. It's because I love this sector because it's the frequency that it beats the S&P 500. So from October 28th into May 5th, December 31st, it's produced an average rate of return of 6.1% and being positive 83% of the time from 1990. Here you can take a look at the up and down, up and down, up and down. Yes, it's done very well recently. It's at the top of its trading channel, but we still have higher highs and higher lows. Maybe it does pull back down. It is outperforming the S&P 500 still. There's no sign of it actually pulling back here. This is a sector that's leading the market right now. This is a sector that you want to be taking a look at as well. Let's take a look at one more sector. This is the retail sector. This is a shorter term trade. The retail sector tends to do well from October 28th into November 29th. November 29th is approximately when Black Friday occurs in the States. Once again, this demonstrates the principles of seasonal investing. A lot of investors want to get in for the big retail announcement on the biggest shopping day of the year around Black Friday. Seasonal investors want to be there before them. And as the event occurs, we're leaving. So from October 28th to November 29th, the retail sector has actually done extremely well. In that short period of time, 1 month period, it's averaged 5.7%. It's been positive 86% of the time. So if we take a look, this trade's actually worked out quite well. We're using XRT, the ETF, XRT, and we're looking back here. Once again, it outperformed the S&P 500 in 2011, outperformed in 2012, 2012. And right now, we've got basically a market perform coming in. I love that when you get this flat market perform coming in to your seasonal trend. And that's what we have right now. Still positive, higher highs, higher lows. Those are just 3 of the sectors. There's lots of other sectors out there that are becoming seasonally strong. Lots of opportunities for investors at this time. Thank you very much for joining me today. I look forward to you joining me on the first Monday of next month. Thank you.